Farmers Tribeca Trade Group, and it is Wednesday, the 20th. So clearly, today was a reversal day. You could see by the red on the screen and how many things were either down by over anything that's in the anything that's in the light pink, it was down over 1.5%. Anything that was down over 2.5% is in a little bit more of a shade of red, and here it's kind of the same thing going on here. But yeah, you could see a lot of things reverse pretty hard. What was down the most? It looks like solar stocks, biotech was down. The semis were down a lot today, 2.8%. They were actually weak in the beginning of the day today too, so they weren't really participating. It kind of just felt like it was more of the small caps were outperforming early, so it just kind of felt like some other things were going. And my thought earlier in the day was that some of these things like semis and some of the software names as well, which were kind of just going sideways a bit for the last couple days. And I was like, okay, that's actually like a pretty strong market when you've got areas that have really gone to the upside. And now we're just digesting. But clearly in the afternoon, that kind of changed, and some of those things like the semis really got hit hard. So let's kind of recap a little bit, and then I will give you what I see in the technicals, and we'll go from there. But we've been through basically a full move in terms of we've seen everything go up at this point over the last month and a half. And we kind of paused a little bit in the beginning of the month. And then when the Fed, last week's Fed meeting, then things kind of kicked into high gear again, especially with the small caps. But we've seen everything rally from the lows. We've seen, the small caps made a big charge, obviously, because this market was kind of led by the Qs and is led by the Qs all year long, right? And then we started to see the high short interest names and areas that hedge funds have big short positions. Those things all squeezed. The Carvana, the Upstart, right? So we basically have run the whole life cycle of how a normal move happens, and kind of the tail end is you had the dash to trash rally too. So that happened, and that happened actually twice over the last month and a half. We saw that happen at the end of, I think, November, right? And then of course things kind of paused a little bit. And then when the Fed meeting, then that trade kind of happened once again. So that's kind of where we're at this point. The other thing that I thought was interesting coming into today, and I've said this like over the last couple of days, is that the indices were all overbought. I think the S&P was around like a 78, the Qs were about a 79. RSI, my thought always is that they don't stay in that overbought territory for long, and then the question is do we just get, were we just going to get some digestion, or maybe a small move down, and that would get you off of those overbought levels? Or it was kind of what you saw behind door number 2 or door number 3, which was a hard reversal to the downside. So that's what we ended up getting. So number one, there's two things before we start to dig into the technicals, is that we're now no longer overbought in the indices. In the small caps, I think we're around a 77 or 78 RSI too, right? And so all of those lost that overbought. So you could chalk that up as maybe good. But B, now that the momentum is lost, right? Sometimes it takes a while for that to come back into play. The other thing too that you may want to think about too is something that I was talking about this morning, was that, hey, this is going to be interesting with the indices this overbought, and then we have the so-called Santa Claus rally that starts on Friday. Keep in mind, we also have the PCE deflator that comes out on Friday as well. But you could still see how it's still possible to have that end of year Santa Claus rally, which again is the last 5 trading days of the month and the first 2 of next year. So that has not officially started. So maybe we're getting the sell-off out of the way. I don't know really. To the answer to the question is it's too hard. and if you're looking for in my videos, you'll often find out that I really don't do much predicting. I have a kind of rules-based system that I try to follow as best as possible, right? And as we get into the technicals here with the market webs, right? The market webs are not predictive. They just really kind of give you a sense of where there's support, where there's resistance, and it allows you to make decisions off of that, right? Same thing with virgin point of controls. They are areas of interest where things could possibly reverse. Where they could also see digestion at, or if they become a battle of the buyers and the sellers. So if there's more buyers, you push through an upside VPOC. If there's more sellers, you could push below, a VPOC, right? So it becomes a battle of those buyers and sellers. Now, a couple of things that I will say really quickly is, a couple of things that happened, right? And everybody always tries to come up for a reason of this, for a reasoning, right? The people who only focus on options, they're going to say, oh my God, it was the 0-day options, right? And everything is a contributing factor. It's best, like one of the things that I do is I try to look at everything and realize that stock trading and option trading can contribute to this move. But there was a big sell program that washed through, right? And what happens is once you have a sell program like that, yes, there will be option buyers who will ride that momentum and profit with that. That's just normal. But don't get caught up in this narrative that, oh my God, it was the 0-day option buyers were responsible for this move, right? They're just playing a move. And if there wasn't 0-day options, they would just do it another way, right? They would be heavy into leveraged ETFs, right? Speculators speculate, right? That's how it happens. And they can create, they can push moves more in the direction of that. But in my trading career, I've seen everything, right? I've seen for a while, back in all the way back in 2007, 2008, that's what everybody was blaming the dramatic moves, right? It was the leveraged ETFs, right? And now the latest flavor is zero. It's the 0-day options that did it, right? But it is what it is. Usually selling, once selling starts, right, then what happens is, the way that the market has been grinding higher, right? Everybody's been long, everybody's been staying long because of FOMO, right? And because of, some end of year window dressing and people catching up. But once people start to rush for the exits, right, you'll find that it's the equivalent of there's only one exit, right? And everybody's trying to rush out and take profits all the same. And I did the same thing. I sold a few positions too, as the market started to sell. So I contribute to that too, just as many momentum traders do. Everybody's selling their positions, right? And then of course you do have the option players. So please try not to, and again, it's just from experience. It's not one product like 0-day options that are doing this. It's a cumulative, right, of a lot of people selling, and it's the picture only one exit, right, in a theater, and everybody in the theater trying to rush out to that exit. All right, so that's a little bit of what we had. Also, I thought that this was interesting. Again, before we go into the technicals, Bespoke Invest said that the last time SPY hit a 52-week high but finished down over 1% on the day was nearly 10 years ago on 4/14. I'll say it differently because that's a tough date. It's a very interesting date. April 4th of 2014. A lot of fours in there. Now, I don't know if that's contributed to that. Such a weird date, but in any event, I'll move past that. I think it's just kind of funny, but here's a reversal, right? And then there was some follow through from that and a push lower, right? Once you lose that type of momentum. Now, the main thing to realize is that if you sold on this day, right, you didn't have to deal with any of this. But at the end of the day, I think it took about a month or so that the market did end up going higher. Right. And then, of course, much higher from there, because this is 2014. And we know that the market has gone up and up and up and up. But if you're trying to not inflict short-term pain on your portfolio, then yes, selling into this candle was the proper thing to do. All right, now let's fast forward and go into what we have right now. So yes, I mentioned that the RSI, which got to a pretty crazy overbought level of right around an 80, we try to go higher today, and we're back below the 5-period moving average. Now, notice we're way above the value area for the month. We're way above the 20-period moving average. So we could definitely fill this in more, and it's too early to basically tell. One of the things that I was watching at the end of the day was whether we were going to close on the lows or if we were going to see some buying, and we couldn't really hang on there, and we did splash lower there in the last 15 minutes. So that's usually not a positive signal. If we kind of held that virgin point of control, which we did, and this is just a 5-minute virgin point of control. This is not anything that significant, but we pushed all the way through, going back to where we were last week, right? So here's the move that we saw back on the Fed day, right? So we're almost we're almost back to where this was. We've cut through about half the back into about half that move into the Fed day. So the other thing, so this is just the 5-minute and just an example that we did finish like very close to the lows of the session. IWM, right? I'm sorry, not IWM. On the 1-hour chart of S&P futures, right? Notice where we stopped, right? This is a 200-period moving average, right? So there is some significance. We did stop right there, and maybe we're holding, and maybe we can see a bounce, possibly back up into the top of value. But we have broken into this, and now it says bearish 80% rule. So there is an 80% chance that we go all the way through. And I would basically watch this. If we break this 200-period moving average, then I would look for a move down to 46.94 in S&P futures. Another thing too, so that's some levels to watch there in S&P, right? And the other thing too is I use the 5-period moving average quite a bit once we're above value like this. Now that we've broken through the 5-period moving average, it's kind of hands off for me, because now we're in a bit of like no man's land, right? On the daily chart, on the 1-hour chart, you could use the levels that I just mentioned, but on the daily chart, unless we get back above the 5-period moving average, which again does a great job at showing when price is really trending and there's momentum. Notice how price stayed above the 5-period moving average. Had a little bit of did close one day below the 5-period moving average. That was on the 6th of December. And since then, we've been above. So we lost this. So it's great for measuring or understanding short-term momentum. So we are back below that. Right now, of course, we could come down into here too and test this extension away from the value area too, but it's just too early, right? To after you have a reversal day, the last thing I try to do on a reversal day is try to call the bottom or put money to work. I'm more defensive once we break that 5-period moving average. The Qs finished down 1.5%, but also notice that just barely closed below that 5-period moving average. And Micron reported after hours, and they're not they're actually up pretty decently. So who knows? This could be just a shakeout, right? I'm not ruling that out. You can't try not to rule out anything, but I would rather go through these scenarios with you after I've already reduced risk, which I did, right? And that's just textbook, by the way, right? It's textbook understanding that, if you have positions on and you're riding the trend, as I've been doing for the better part of the month, right? Once we break that short-term trend, I'm out. I'm out of a good number of positions. Now, I didn't sell everything. Some people do that. Some people, once they get a reversal day, they go right back into 100% cash. I'm still holding a couple swing trades, right? I'm not back into 100% cash, but I sold a good portion. I had about I think about 8 or 9 swing trades on. So I'm down to just a couple of those. All right. And then you just play a little bit of defense, right? Here's IWM, which also broke into the value area, right? Was leading the way. That's a nasty reversal for IWM. And the level to watch there on the 1-hour chart is 197.73. Right. And that's a break also, moving back towards this VPOC. Maybe this gap needs to be filled as well. We'll see. But for now, you could use that 5-period moving average. But why trading gets so difficult for traders? Well, I mean, trading is difficult, right? But they sometimes will not act as the risk managers. They're more acting as speculators and so on and so forth. If you set up your rules ahead of time, right? Because at the end of what I find that younger traders or newer traders get hung up on is they don't ever want to have a loss, right? And I try to tell one of the things that I try to teach traders is that it's no problem having one day of loss because I'm down money for today, but I've made money on this whole way up, right? So you kind of have to understand like that's something that you have to get like ingrained into your trading that you're going to have a down day one of these days, right? And that's just pure trend trading, right? If you follow this, and I don't like this IWM chart, so let's go to the Qs. But if you follow this trend all along, right, you're making money. Maybe you didn't buy. Again, trend trading is not trying to time the bottom or time the top, but make money on the meat of the move, right? And that's basically what we've done. But yes, on the last day and the day of the reversal, I lose money. That's just how it works. But it's only a fraction of the money in terms of what what I've done over the last month and a half, right? And that's the perspective that you have, right? Now, again, there's a whole bunch of psychological things that goes on in your mind is once you start, if you started to buy the dip a little bit, that's perfectly understandable because every time that we've had a market dip over the last couple of weeks, it's been bought like immediately. So, if you got caught buying the dip a little bit, and obviously, this is a fast move, it happens to everybody. So that's why I try to do these end of day videos too, to try to help a little bit, right? So that you kind of gain the perspective, right, and not get caught up if you've got caught in some trades and they went down for the day, right? The whole objective is to it's to realize that you are going to have down days, but not to have down weeks and certainly not down months, right? That's the goal. All right, guys, I'll leave it there. Again, it'll be very interesting. I'm not even going through single names in this video. And I think looking at the indices first, is the first step, and then going from there and looking to see where there was relative strength and what names held up a little bit better, and so on and so forth. All right, guys, and I will do that for members later tonight. Have a great day, everybody. See you tomorrow.